That was fancy with the 5, 4, 3, 2, 1.
This is exciting.
Look
This
at
is
this.
exciting.
For our
Well,
listeners, we're using a new tool to record this podcast for you guys. The highest of quality is now coming out.
Are those reading glasses, AJ, or just general glasses?
These are general glasses. I feel like we transitioned episode 26 or 27 or wherever we are, and now we're like, Q4. Here we are.
Professor
old
Bruno. Professor Bruno.
AJ just had his board meeting, so this is like board meeting AJ.
Yeah. What do you think of board meeting, AJ? Different background, different shirt?
What else? I could use, well, we're going to have separate audio tracks, so we can turn you up if I can't hear you very well.
Oh, well, I could just talk into the microphone.
There we go.
That
You
would
can. Yes, please do.
I can talk into the microphone. I can do that for you, Sam. Anything.
Sam, where's your microphone?
I didn't have time to plug it in.
Oh my God, slacker.
I know. We're going backwards in terms of episodes.
This is Topline.
This month's sponsor for Topline is Clue. Go-to-market leaders need help too, and you can learn from some of the very best sales and marketing leaders at Compete Week 2023, powered by our friends over at Clue. GTM leaders from Palo Alto Networks, HubSpot, Lacework, and more will all be taking the virtual stage November 8th and 9th, sharing the tactics, tips, and strategies they're using every single day to win and retain more business against the competition. 2 days of nonstop, industry-leading competitive enablement content. All at Compete Week 2023. Register for free today at CompeteWeek.com. That's CompeteWeek.com. Thanks for listening.
We got another episode of Topline from your host, Sam Jacobs, CEO of Pavilion, Asid Zaman, CEO of Sales Talent Agency, and AJ Bruno, CEO of QuotaPath.
Awesome.
We're on, guys.
AJ, is it taking, kicking ass, taking names? Is that taking names? He's in boss mode. He's in boss mode. Coming out of his board meeting.
Awesome. What do we got? I did have my board meeting. We're going to talk about my board meeting, but that's not interesting. It feels like that's a small talk thing. Asid, what do we got on the docket today that we're going to be chatting about?
Look at that. Okay, so we haven't gone through the market in a while. So I went and dug around to get some data for our listeners. And so the Fed has a GDP growth target of sub 2% to curb inflation. And the projections for Q3 are out. And the Atlanta Fed projects it at 5.4%, which is really high. Now, the CPI, the jobs report, and the consumer spending reports have all come in quite hot. And the US... Hot is good, or maybe not. We shall see. So the U.S. economy is roughly 68% consumer spending. I actually didn't know this. This was quite wild to see. And so what's happening is that right now we have low unemployment and we have wage growth, and Americans like to spend money. And so they're doing that. But consumer savings are now the lowest in the US compared to advanced economies. And so that's the reason why consumer sentiment has dropped quite a lot recently. The index was at 71 in July, 63 right now. So lagging indicators indicate that the Fed might actually raise the rate once more because the economy is too hot, right? And that was the threat that they'd made last time around. But the 10-year yield today reached 4.9%. For the first time since 2007. So that should slow activity down, and the markets might do some of the Fed's work for them, which might mean that they don't raise now. The reality is, whether they raise or they don't raise, the headwinds are still here and they're strong, and they'll be here for the coming quarters. When you take that into tech and see, well, what's happening in our world? Carter released some data. 543 startups have shut down in 2023, 467 shut down in all of 2022. So that's a significant increase. 19% of venture rounds are down rounds this year, and they are down rounds by a margin of 30 to 60% from a valuation perspective. And there are an estimated 75 startups in PitchBook's IPO backlog, meaning that there's still a poor exit environment, and the Klaviyo, Instacart, and Arm and Birkenstock IPOs have not performed well. So the window hasn't opened, and this backlog means that there's a liquidity issue for investors, which has downstream effects on those trying to raise funding. So the question is the following. Last week, we spoke about how we are exiting this era of SaaS, and we're in this new era, which in the near term is defined by AI and non-0% interest rates. We discussed how early adopters will gain a competitive advantage if they figure out how to leverage AI to drive up productivity. But to do so, you have to take a risk. So even I'm thinking of the following, which is how can someone balance being maximum efficient, which is what investors want and you have to do in this fundraising environment, with taking risk by experimenting to figure out how to leverage AI? How do you balance those two things?
Well, since I just came from a board meeting and talked about this very topic,
Look at
Austin,
that. Timely.
This is hilarious. This is like, you might as well be one of our investors right now. This is fantastic. Good work.
I'm still waiting for my advisory shares.
You can join us. This is this new board observer, Asad Zaman. The one thing that we were really diving into is allocation of resources. And you have these three different paths. I'm going to talk broadly and not talk specific to quota paths, so all of our listeners actually can follow along and understand this a little bit.
Can you also talk into the microphone
and not jump around?
I like how the guy who doesn't have a mic is doing like, can you speak in the mic?
I'm saying the same distance from my internal microphone.
Okay, so you have...
Here's your voice. I love to hear it.
You have customer retention, you have improving retention, you have adoption of your platform, and you have innovation. Those three things are inherently at odds when you're building SaaS and product platform.
Wait, so say them again?
Retention, your customer retention, adoption, and innovation.
Isn't adoption and retention, don't they go hand in hand?
Not always, no.
Okay.
Think about your end user versus your buyer and who might be using the platform. If you have, for Pavilion, if you have corporate licenses, your end users are adopting or going, maybe you had everyone at the at GTM last week, but the decision maker wasn't there. So adoption and retention can be disconnected from each other. There is overlap. For sure, there's overlap with those three. And so as an organization, you have to figure out where's the Venn diagram and where does it have the most overlap based on the customer data that you're talking to. And so like, as we forecast out and are very specific with our roadmap, we have to really call our shots on, you know, the retention of the customer, because if you're not differentiating, you're dying, you're dead. And so what keeps me up at night is a velocity around that differentiation. And especially in this market where you have the market that we're seeing with SaaS and growth and fundraising in general, coupled with the investment in you have 10 times the number of competitors potentially that you had 3 years ago or 4 years ago. And so it's a very fascinating market, but it was something that we were just kind of discussing what we're seeing from the board more broadly and what was going on in the ecosystem. And it matches what we talked about last week, or what my now like retrospective and retro on last week and all of the 3 different events that happened is just, where is there opportunity to get more value out of one thing or a platform consolidation? 2, what are the customer analytics? How are we using the tool that we're buying? And 3, what's the next year look like in how learning? That matches the retention, adoption, and the innovation, those 3 buckets really well. If you think about what are the leaders that we work with are thinking about and worried about and keeps them up at night.
But AJ, somebody I was talking to said this to me. He said, the most inefficient stage for a business is when they're trying to find product market fit, to the point where they say do things that are not scalable, right? You're trying to find product market fit, and you're taking risks, you're experimenting. The nature of experimentation is a bunch of them are not going to work. And so right now, founders and executives feel very scared to say, I'm going to experiment in all these interesting ways to leverage this new platform and this new technology to potentially create some productivity increases in our business at a time where investors are saying you need to be super efficient. Those 2 things are really hard for people to manage right now, and they're tilting towards not experimenting, not doing these things, because they feel like between these 2 things, being efficient right now is more important. And they might be right, but it's really hard to balance these 2 things for them.
Isn't AI supposed to be efficient? For me, if you're focusing on innovating around getting more efficient and AI is a cheaper solution, then I would think that it's not even, is it it's not about, I don't know, maybe I'm misunderstanding, but isn't the risk, the innovation that we're looking for is how do we do more things with fewer people? Isn't that definitionally, the worst case is we do fewer things with fewer people, and the best case is we do the same things with fewer people.
Yeah, that is the best case.
So, I don't know. I feel like well, first, by the way, in all of your economic data, you also didn't mention the fact that there's like this Middle Eastern conflict.
Yeah.
There's the war in Ukraine.
Yeah.
Jocko was saying that China's going to invade Taiwan in April.
That's very specific. Does he have a friend in the army or something? Like, what? How do you know it's so specific?
So there's definitely a lot of reasons to be pretty nervous and caught. So I think that I guess the way I think about it is like, what doesn't kill you makes you stronger. I really feel like that phrase is very accurate in the sense that, like, if you don't die, and you mentioned in the Carta data that more people have shut down than ever before, if you don't die, you are going to be forced through evolution to learn how to operate more efficiently. I think so.
I think the challenge with that is that, so I was looking at Crossing the Chasm, and about 12% of people fall into the early adopter group. And if you put like the super early adopters and the early adopters, it averages out to 15% of people. And to get the efficiencies we're talking about, so to be able to use AI to do more with less, you kind of have to be willing to try leveraging it in a few ways, and you're going to fall on your face on a bunch. And that's the challenge people have, is that if I run 10 experiments and 8 of them don't work, then my board is going to be really upset. The 9th one might work, but they might not give me the opportunity to get to number 9 because they're like, look at this idiot, lost a lot of time, energy, resources, spending it on this thing, and is not prioritizing efficiency. That, I think, is where people are finding themselves a little bit stuck when they're trying to take AI and the market together. So there's this other thing that comes out. So Jeremy Donovan from Insight made a crazy post today. Really nice guy. 5 years ago, he benchmarked the number of touches per opportunity sourced through cold outreach.
Oh God. I don't want to hear this number.
Look at this. This is going to blow your fucking minds. Okay. So 5 years ago, it took 200 to 400 touches to create an opportunity through outreach. Wild guess how much it takes right now.
200 to 400?
That sounds really high.
This is average. This is across many possible accounts and contacts. So this
Channels.
is like all the activity we're doing. How much did it take to create an opportunity?
So like if you saw like a billboard on a company, that would be a touch point.
Or also just because he worked at SalesLoft, so maybe it's like he had good data on like a 13-step. What is it? They call it a cadence at SalesLoft and a sequence at Outreach, but a 13-step sequence, but across 1,000 accounts. So that's the point.
Decision makers.
Okay, I'm gonna guess 2,500.
I'm gonna guess 10,000.
Wow, guys, relax. Relax. We're not there yet. But it's 1,000 to 1,400, which is insane. That's like almost a 5x increase since he did it last time around. And I think this also creates an interesting question, which is that AI is going to, from an outreach perspective, allow you to scale volume of outreach, but also quality of outreach, right? So like before, even right now, the quality of the outreach, what the person says, was a way to stand out. But now if your inbox is just full of really high quality outreach, and a lot of them, then how does QuotaPath stand out when it's trying to prospect into an account?
You want to come run our outbound team, Austin? Should call Jeremy Donovan. I think about previous companies that I've run, and outbound worked at Trendkite really well. We had something of value. We had a press report that like we could literally share. It was almost like the website grader that HubSpot did on the inbound, but they created that inbound channel through just putting up a site. We actually reached out and said, hey, we have a press report. And that value became interesting. I have believed for a long time that the world is in the total other way. That 1,400 touch points, sure, but if you have a real credible touch point with something of value coming from a perspective of credibility, you can limit that number of touch points before they respond exponentially. I still believe that, regardless of AI. How many of us though, like you both do this probably. I don't know. I haven't automated this. I should. You wake up at 6 a.m. Austin, you wake up at 11 a.m.
6 a.m. Have I lost
11
it?
a.m. for Austin. And you like do the exercise of like, okay, I have these 100 emails that come in at 9 a.m. on the dot or 8 a.m. on the dot. And you just kind of like erase them. But the challenge with that is like, well, maybe I am erasing something that's of importance because I'm reading the first 10 characters of your email and deciding right then, and do I know this person? So I don't have a good answer outside of, we have seen effective outbound right now in contacts and opportunities where we've already had the 1,400 touch points in closed loss. And folks that have like seen us a year ago and we can revisit. That's where we're having the most outbound success in today's business.
That's interesting. Whenever I get these emails in the morning, if I just look down and there's an unsubscribe button, I don't even read it. I just click the button and I unsubscribe. That's it. Straight. I don't give a fuck. Sam, what do you think?
I'm worried about the human race when you tell me those stats, because what that tells me is that everybody is having trouble concentrating and focusing, and that the volume of information is just so high right now, and there's so much noise that even if you have something of good quality, the odds that somebody will find it are low. I guess here's where I end up in my head. All of this, I was on a call yesterday with a couple CEOs through Pavilion, and they were talking about the fundraising market and how they needed to get, and how it was really wild actually. There was like this need to hit Q4 because they want to go out and try to raise in Q1, and there's a level of, I don't want to call it desperation, but it was a level of near panicked urgency around like, we got to hit our numbers in Q4 because we got to raise in Q1, and if we don't, then we got to look at other things. And I think, to me, that reflected a couple things. One is that like, I still don't think the message has gotten through to everybody that like we live in a different world. And I think that my point of where am I going? How does this relate to the fact that it takes 1,400 touches to create an opportunity?
Say more about that message part, Sam, because that's something that investors keep saying and people disregard, but it does seem to be true.
I just don't think, I think like people are talking about 3-to-1 CAC to LTV to CAC. I just think like these numbers, I say this every week, and I'm sure it's boring for some people, but like the physics of startups, every single thing that we think we understand about what's required. How many people is a lot of people? What should revenue per employee be? What should good unit economics be? All of those things were a function of a 10-year yield being significantly below 4.9%.
Yeah.
Right. And in some cases like inverted. And so my point is that, So how does it relate to 1,400 touches? Like, well, 1,400 touches feels like desperation to me, right? It feels like massive onslaught, like just try to make it up in volume. And what's the answer to that? What's the answer to us on this podcast? The answer is, I don't give a fuck how good any one particular episode is. It is about doing, like the guys in All In. I know some of our listeners don't like how much we reference them. It's about doing 50 episodes. That's what it's about. It's about
repetition.
It's about playing for the long term and stability. The only way to stand out is to put aside short-term focus. And that's because you also can't count on 10 times ARR as valuation.
I go back to what Austin said about fatigue, though, that it's really, or maybe you said it, Sam, you're usually the fatigue guy.
The commentary on my age.
I like how Sam's been branded with this. You and I were chatting about this before the episode. So for context, what we were saying was that right now we're having lots of conversations where people feel like they're fatigued because they've been fighting for so long, and that fatigue leads to unclear thinking. So they identify that there's a problem, but they might identify the wrong reason for the problem or the wrong thing to do to address the problem.
Austin, why do you have bubbles popping up in your background?
Did you see that?
Great,
was
guys. Did you
amazing.
get any bubbles? Even
That
the
was your
software is
thinking-
like,
your
this
thinking bubbles.
guy, fucking great.
Thinking bubbles.
Live.
Yeah, so think about those. You have to show up every day. You have to be on your game, and think about, you're sending out how many, like 10, no, not 10 times. I can do math here. 4 times the number of touch points than you ever had to. You have to put 4 times as much energy to get anything out. We talk about this. I talked about this on the show already at the end of Q1. I was like, my God, I've never worked harder to get less out of it.
Yeah.
You just broke down the activity that is driving this.
Yeah.
You unlocked this because activities drive
Jeremy did.
objectives drive results. So when you get the results and you 2x your activity, 2x isn't good enough. You're feeling like shit at the end of the day. You have to 4x your activity. 4x your activity. I will say this. This is going to blow your mind. You guys ready? I've been an operator and an executive, founder, CEO, multiple companies for 16 years. I don't even know, since 2013. So whatever. That's math. That's 10 years. Okay, AJ, here we go. I'm going somewhere with this. Outside of the years that I founded both companies, Trendkite or QuotaPath, this is the first year in a commercial world where I haven't tripled or doubled the organization as the leader.
Wow.
Doubled revenue or headcount?
Yeah, revenue.
Holy shit.
Yeah.
How does that feel?
That feels great. I thought, but I mean, one hand is like, okay, I have my track record. On the other hand, I was like, holy shit, I've had to relearn. We're gonna have to relearn everything. We have to relearn everything. Marketing has to relearn. Sales has to relearn. Like, but I'm making a pitch for Pavilion, by the way, right now, because someone's got to teach us, Sam. Someone has to teach us what the fuck we're doing.
Well, we're going to teach ourselves, but you're right. That's why community is the thing that won't be replaced by AI. I agree. Everything should be an ad for Pavilion, as far as I'm concerned.
And now let's turn it over to our sponsors.
Today's business landscape is full of uncertainty, and succeeding as a go-to-market leader has never been more challenging. Pavilion is here to provide you with the education, support, and resources you need to grow, learn, and unlock your full potential. Join more than 10,000 of the world's leading go-to-market executives in a private membership community designed specifically to fuel your success. Visit joinpavilion.com and use the code TOPLINE20 to get 20% off your membership. That's joinpavilion.com, and the code is TOPLINE20 to get 20% off your Pavilion membership. And now, back to the show.
I do think that you nailed it, AJ, in terms of the community thing, because we were talking about how do you experiment when your investors are breathing down your neck and saying don't waste $1 in the wrong direction, but figure out how to leverage AI at the same time. I think this is where a number of people get to share what they're doing and what's working and what's not working. And so instead of you having to try 10 things to get to one that works, maybe you are able to do 2 or 3 things and the community gives you the rest of the insights. I think that's one. The other one is on this outreach side. I do think this is where these events really become important again, where there is a power of getting to meet somebody in person, building that relationship in person. We were in Nashville all of last week, and you could see that people were prioritizing this and that it does work. Like, even for me, it's worked. Like, I've come back with some really good first relationships developed that are leading to really interesting conversations. And I'm pretty sure if I had an outbound sales team and let's say somebody reached out to AJ from Marlin Equity Partners, he wasn't responding to that. But now we're talking because he was there and he came to my session, he liked it, and now we're chatting. So I think this is where conferences and community does probably become really important.
But that's exactly, it's just like, where does it, the higher the interest rate, the lower the growth, right? Mm-hmm. That's how, because of the time value of money. And so what does that mean for running a company? It means that AJ can't have that hedonic adaptation challenge where it's the first year that he doesn't double or triple, and therefore he feels like he's less of a person. He's still doing a great job. we have to like have different, we have to accept different parameters for how we're going to run these companies. And for me, again, like what that puts emphasis on is you got to find a way to get, I just think like what used to, I don't know about the rule of 40. I think we all need to be willing to accept lower growth for higher profitability and just better run companies. And if that means that the exit valuations are different or take much longer, then again, you got to design your life and your business in such a way that you can do it for longer. And you really, for me, when we're unprofitable, that's when I have the existential dread. You know, that's when I get freaked out because what's, we raise money from a venture capital firm, but I'm just not sure we're, maybe we're a private equity business, but, YPO is not really a VC type of company, and EO is not really a VC type of company. And, World 50, they raised private equity, but they didn't really raise VC.
Chief did, right? Chief raised private.
Yeah, and they're fucked. And I don't mean because of a bad, I like the founders. I just think like it's a real estate and events business.
Yeah.
Fundamentally. And it's not worth $1 billion. That's all. It's going to be, and neither are we, we're not worth $1 billion either.
There are a lot of communities that were doing community plus job board type of thing. And that's also not $1 billion business. Like you can't have a niche job board and say, oh, we'll become $1 billion business. And that's your main revenue.
Well, that's okay, right? Like
Yeah,
it was only
totally
in the last 10 years when like not being $1 billion business meant that you were a loser. Like we just have, again, my thing for myself is like, I'm going to eat all the shit. I'm going to make all the tough decisions this year. We're coming off of the best thing we've ever done in the history of our company. And I'm going to keep trying to get better as a CEO, but mainly I'm going to make sure that we head into 2024 and we're structured to be profitable so that I just can't do another, so many people can't do another year and something's got to give, something's got to give.
Sam, one of the things I was thinking about related to the conference was that it was the biggest, one of the biggest wins you guys have had, right? And we spoke about how you guys took this big risk at a really tricky time to take risk, and it worked. And so one thing you would probably be thinking about is how do I use this as like a jumping off point for more momentum, right? Like how do I get the most juice out of this experience? And in a market where all of us have less wins than we've had, AJ just spoke about the fact that first time in 10 years that he's not doubled or tripled an org, like a revenue.
Why don't you keep reminding me of that?
That's fucking crazy. It blows my mind. Like that's
like
wild.
my CEO coach, who I love, by the way. I'm just kidding about that. I immediately regretted saying that. I'm like, Glenn,
coach, there's been a few CEO Pavilion members that want to like need a coach.
Glenn Gao, I saw that. Glenn Gao, he listens every week.
Oh,
every week.
We need you.
So he's going to hear this right now, and
Glenn, email me sam@joinpavilion.com.
Done.
I've
that
got
will happen.
nice for you.
There we go.
We'll test his listening skills here.
So when we do have a win, operationally, how do you get the most out of that win? How do you create a reverb that's the largest possible reverb possible? You've probably been thinking about this, Sam.
I think organization and follow-up, and I will say that thank God we were relatively prepared and equipped, so it's like making sure that you're set up to press go as soon as you get back from that kind of experience. So we have a list of all the people that were non-members. We're following up with all of those people. We're leveraging SamBot. The outbound campaigns have been, we have a plan, TBD on whether it works, but it's certainly not that we're doing nothing or being caught flat-footed. So far, the momentum, the great thing seems to be that the momentum seems to be lasting. And then the next thing is, how often do you need to have these like tentpole kind of like lightning rod experiences? Asher texted me that you get 6 weeks of momentum from a good event, and I think we probably get a little more than that. But so for me, the very next big thing is like the thing that I loved about the event was that 40% were non-members. So for anybody like the three of us that are used to seeing the same people, there are a lot of the same people and tons of new people. Wow. And that was because of Insight and Marlin and because they really endorsed us. So for me, the next big thing that I want, although on a smaller scale, is CEO Summit in Scottsdale. I want to make sure that same thing. We have 20 to 30% member CEOs, and I want the idea of Pavilion to extend beyond whoever happens to currently be a member. But anyway, the answer to how do you capitalize on it is make sure to remember to capitalize on it, and don't assume, have a plan for after the event as much as you have a plan for during the event.
Sam, did you memorize your closing remarks?
No.
Sam riffs.
I'm a riffer.
That was it was pretty impressive. I was just thinking, I was like, wow, Sam's very clear right now.
Oh, thank you.
So I want to give you kudos. I'm giving you the shout out. I already gave you the shout out last week. You're not getting this week's shout out, but
very nice of you.
Yeah.
AJ, from a sales team perspective, for revenue leaders that listen, how do you capitalize on the little few wins that a sales team is having? Like, let's say a person tries something new, books a meeting from it. How do you create
also to the point, right? Because here's the real thing, that the better correlate, sorry to interrupt you, but the better comparison is you just had the biggest day ever, the last day of Q3, September 30th.
Yes.
And that's always like the terrifying thing. You drain the pipeline, everybody's friggin' high-fiving, the alerts and the bots are going off, and you're like, I'm gonna be a billionaire. This is definitely the greatest day of my life. And then October comes around and every dashboard swings back into the red and you're back to zero for Q4. What do you do?
Is that Austin or AJ? Who's that to?
That was to AJ. That was to you.
Oh, me. I'm going to brag for a second. We've closed 8 deals already this quarter. So we've got, which is good for us, but we're in, look, I have a new sales leader that came in. Graham is focused on a partnership play. And Ryan Milligan, who ran account management, is now focused on running our sales team. And we got the opportunity to have a reset and have a restructure of like, here's the conversation, here's what we're going to, expectations. And he ran this at 9 a.m. on October 3rd, whatever the Monday was, like ran this first thing in the morning. So that I love, because I was the sales leader that we'd go out party end of the month, but I would always book one-on-ones with reps at 7 a.m. the next day to like really just set the tone and just be like, this is how it goes. This is the world we live in. And it was always with the rep that struggled a little bit, and the last person they wanted to talk to was me. So it was great.
At 7 a.m.
7 a.m.
That's mean.
Commitment.
That's badass.
So I was that sales leader. I'm not saying we should do that in today's world. It's a little bit different, but I do think you're setting the tone and setting expectations. But it's not about what they're like, okay, now you have to show up XYZ or to go to these trainings, or this is one pipe review. So here's what I'm going to give to you. Here's what I'm going to help support and help make sure that you're successful. And you can't do that every quarter. Like, this is a specific quarter for us, but I think you need to have sales leaders and need to have motivational talks with your sales leaders. If you're a CEO or if you're a CRO, have motivational talks with your sales managers about like, listen, here's what we saw in the data. Here's where we're going to just like completely reframe. You mentioned Jeremy Donovan. Richard Scrow, one of his colleagues at Insight, talked about this idea of sales managers and forecasting, and how much time the sales managers feel that their time as the amount of time that they're spending on forecasting versus their team and deal like coaching has risen 47% in the last 2 years. 47. So like, as sales managers are spending way more time in what is, I would classically consider administrative.
Yeah.
And so the community aspect that you talk about, Sam, is like we're sending more emails than ever, 1,400 apparently. We're not talking to people. We're talking to people less. And so like, that's what needs to change. Start the quarter by having human-to-human interaction and connections, and really go back to basics of like, hey, what do you want to achieve? Like, yeah, the world's different. This is different growth opportunities. Different companies, startups are like going under at a rapid pace. Like, what do you want to do? Like, what do you want to actually do? And have that human-to-human trust conversation, I think will go a long way with your team.
I think something I've noticed in myself and in others in our space is that we don't celebrate our wins a lot. We don't sit with them. It's actually work that I had to do with my coach, where he's like, dude, you don't even know any of your wins. Like, you actually have to sit down, write them out, etc. And I feel like there are a lot of people that I meet and work with that are similar, where they'll have a win and then they kind of quickly go past that. Whereas the loss, they sit with the loss. It frustrates them. It lives in their head. And I think this is actual work that one can do, which is learn how to get the benefit of the win out of it. And so I think some coaching to reps when they have a win to know how to get it and get the maximum juice out of that moment is something that if our frontline managers are doing can be really helpful, because a lot of people inherently aren't built like that. So I think that's like one simple thing. The other thing is, what you said is mind-blowing. The frontline manager's job has evolved so much, and such an important job, right? I think if you think about culture in a business, I think frontline managers define culture probably more than anyone else other than the founder and CEO in a business, because culture is so much about conversations, and the most conversations somebody is having is with their frontline manager. And so if they've gone through a lot in the last 3 years, their job has fundamentally changed, even if you just take into account the fact that we're either hybrid or remote now, and that's a whole different way to manage, and it changes your capacity completely. And now you have to do all this admin work at a time where the market's changing. That group is really going through it. That's a tough group. Okay, so let's transition to...
And now for a word from our sponsors.
Okay, so we did it. We did it.
AJ did it too. Maybe we have 2 ad reads.
Maybe that's right. Look, I made some money.
We've got QuotaPath and Pavilion. Now we need a break from Sales Talent Agency.
Okay, so last question before we wrap this up is that Jason Lemkin made a really interesting post. He said, it used to be that you really couldn't raise a ton of VC money in SaaS until you hit 10 million in ARR. I remember those days. That had one side benefit. It meant almost any good M&A offer at that stage would make the founders big money. Now, way too many SaaS founders raise too much money before 10 million in ARR. And so, Sam, you said you were speaking to a lot of founders recently. You know, a lot of them want to raise a lot of money, but kind of don't understand that it closes a lot of doors for smaller exits, meaningful, life-changing exits for many. But how do you feel about this statement that he made? Do you think it rings true?
Yeah, 100%. I mean, but the rub used to be, I remember talking about this with my friend Jonathan Glick, and he said, you know, the East Coast difference versus the West Coast difference. And the East Coast, Facebook would have sold the first time Yahoo tried to buy them, or whoever it was that made the first acquisition offer. And the West Coast is, you know, just want to change the world and want to shoot for something big. And that's why VCs like West Coast companies, because you need that you need the person you need a few people. Like, the power law dynamics of venture are arranged such that a bunch of small exits don't work for the asset class.
Yeah.
And so they need people to say, go fuck yourself, I'm building $1 billion company. I just think that the reality of law of averages and the law and how many great companies are actually built regularly means that, like, most people aren't going to be Facebook or Meta. And so, yeah, I mean, I completely agree with Jason, and that's why there's this whole new, I said, it's the whole new world of solopreneurs and all these people that if you keep your valuation, I mean, I was on the, you know, I was talking to a founder who raised at a similar valuation to us, so 80 pre, wants to go out next year to raise, you know, 200 to 300, and I'm like, I don't know, I'm like, I'm just trying to get profitable so that my most recent round is the benchmark that I got to clear. And like, but again, maybe I don't have the same momentum that guy does. I just think that
I don't think you're wrong there. I think that I've heard from another founder that is having trouble raising a down round, had already come to terms that they're a down round, is above 10 million in ARR, is challenged, is just having a lot of challenges. Half their last round's valuation.
Wow.
Yeah. So does that wipe out all of the common or most of the common?
No, it's recapped potentially. I think that with the recap, it doesn't. So yeah, recap would assume that it does, but you're basically repricing the options. It's kind of what we talked about a few weeks ago, where you reprice the options. The employees feel like it looks good, but ultimately there's a
All right, there's like preferences
participation on it. So you have
almost like structured debt in a way.
Yeah, it's like you got to clear. I don't know if it's covenants is the right term there, but you have to clear certain thresholds. They're not. I mean, it's not warrants, because warrants is another mechanism that can happen where you have penny warrants, and so you can basically have options that you call and just say, you know what, I'm going to exercise these 2-cent options right now. That's a common way to do this, but it's.
Yes, I agree with Jason. That's the long and the short of it, and that's why my goal is not to. I'm trying to get off this merry-go-round as quickly and as prudently as I can for my company, and get to a place where maybe we can be worth 40 times EBITDA one day.
Look at that. What a good moment to transition to. Shoutouts.
Shoutouts.
AJ.
Oh my goodness, I have to go first. I've had a long 5 weeks. I'm going to shout out my management team who did a phenomenal job on the operational review today and during the board meeting. It was very buttoned up. It was clean. The narrative was great. The numbers all make sense. The KPIs are clear. The roadmap was clear. Everything about our operational review. So I'll call them out by name. Of Sarah Strope, CMO, Ryan Milligan, VP of Ops. We have Cole Evitz, my co-founder, Eric Heidenberg, my other co-founder, Graham Collins, who runs partnerships. And we have Carrie Carroll, people, Ryan Messia on the VP of Finance. And I believe that was 8 people. So I'm going to say that was all of them.
Good shout out. I'll do mine and then some.
Yeah, you go.
Okay, so I am shouting out my partner, Sherry, female Indiana Jones. So the reason is this. We have about 30 like super rare tropical plants, and we live in Canada where the winters are minus 30. Most people would let nature run its course. She doesn't. So when I got back from Nashville, these plants have been brought inside, and a bunch of science is happening where these plants are going to live while it's minus 30 outside and are going to feel like it's tropical inside without us sweating our asses off. And I just find that fascinating because it's a skill in an area that I have zero skills in, and it makes life very interesting. So shout out to her. Sam. If you have to think this much, you can shout me out. I'm always there. I'm an easy one.
I'm going to shout out my friend Simi Sapir. Simi worked for me at Axial, and then she went on to Zenefits, and then she was at Vimeo, or Livestream when they sold to Vimeo, and she worked for me at Livestream as well. And now, I don't know what she's doing, but she's been very active talking about what's happening in Israel because she has a lot of family in Israel. And it's very, what a difficult time it is to be on social media, especially if you're loud, if you're very passionate. And so she's posting all of the hate mail and the nasty messages that she's getting from people as she defends Israel. And it's brave, and she's a fighter, and so she's not backing down, and people are, saying that they're going to come hurt her or her family.
Wow.
And, and she's giving it right back, but she's very brave, and I appreciate the information that she's putting out into the world because it's helping educate a lot of people that don't have the right level of information about what's going on over there. So that's my shout out.
Look at that. What a good episode. Another one.
Thanks for listening.
Another banger.
Why don't you read us out, AJ? You're more on top of it today.
I know. I started off so strong, and here we are at the end of the episode. So from myself, AJ Bruno, founder, CEO of QuotaPath, Austin Zaman, CEO of Sales Talent Agency, and of course, Sam Jacobs, CEO of Pavilion. Have a great night, everyone. This has been Topline.
Thank you for listening to this episode of Topline. To learn more about the trends, news, and developments impacting the world of B2B SaaS, head to joinpavilion.com, where more than 10,000 of the world's top go-to market leaders go to achieve and unlock their full professional potential.